Hello everyone, so I'm going to use this video to explain a very important tool called the Fibonacci retracement. So to find the Fibonacci retracement, you can just go over to this place, then click on it, then over here at the bottom you see Fibonacci retracement or Fib retracement. So what it actually means is that you use this tool to identify pullback. What is now pullback? So pullback is, for example, you are having an uptrend. You know an uptrend moves like this, then price goes like this, then immediately price go up like that, then maybe it came to a level of a resistance. Let me identify the resistance. Maybe it came to a level of resistance over here. So and it starts pulling back a little bit or retracing. You can say pull back or retracing. It starts retracing it. So immediately you notice, let me do it again. Immediately you notice this retracement over here. Immediately you notice this retracement, that price has started forming maybe reversal candlestick patterns, shooting star, bearish engulfing pattern, or dark cloud cover. Immediately you start noticing those bearish reversal patterns. That's when you should pull out the Fibonacci. So the Fibonacci is going to help you to know how far is going to help you to know how far this retracement is going to last. Is it going to be a complete retracement, that's down to this lower level, or is it going to be a 50% retracement? Is it going to be a shallow retracement, or is it going to be an LD retracement? So the Fibonacci level actually helps you to identify that. So another case you can use the Fibonacci again is in downtrend. For example, in downtrend, the price goes like this, then it makes a longer move down, then you start noticing pullback. Maybe after the price has came to an area of support. So you start noticing, immediately you start seeing pullback patterns, candlestick pattern like hammer. You start seeing strong price rejection around the support. That's when you should pull out Fibonacci to know how long this pullback is going to go. Is it going to go for 100% retracement? Is it going to go for 50% retracement? Or is it going to go for a shallow retracement or an LD retracement? So I'm going to explain all those concepts behind the LD retracement, 50% retracement. So I want to add my Fibonacci 2 to the chart right now. So I add it Fibonacci. So if you are dealing with uptrend, like the price is going up like this, so I said immediately you start noticing this pullback over here. That's when you want to start drawing your Fibonacci. So if you want to draw it for price going down, like pulling back down, you want to start from the up. Let's say this is a swing high. Let's say this is the highest point of the price. Then you want to pull down to the lowest point over here, this point over here. So you drag it down to that lowest point, and then you get your Fibonacci. So let me explain what these levels mean. You can see various lines on my chart. You can see over here you have one. This one means 100% retracement. This one means 0.78% retracement. This one is 60%. So they basically means something. This red and the purple are your shallow retracement. So in this case, when the price is pulling back from an uptrend, if it should come to this red, you say it is a shallow retracement. If it should come to that point and starts retracing like this, and the trend continues upward like this, you say that okay, price has made a shallow retracement. But if the pullback was towards this level, you can see these two levels that are golden, that these two levels 0.618 and 0.5, these are your golden ratio. I call it, you can call it a golden zone. This is the most important level of your chart. This is when you can say the price has made a 50% retracement, and the 50% retracement is like the almost the perfect retracement that you can expect the pullback to, for the trend to continue. So this golden zone, you can just even identify it with this is your golden zone. So most of the time, let's say in most cases, the price always pull back from this golden zone. So once the price gets to this place, the trend will continue. If it's an uptrend, it continues. If it's a downtrend, it continues. So you have your pullback at this golden zone most of the time, but in some cases you look out for this level too. So this level is your shallow retracement when the pullback is coming from an uptrend. Then this green level, over here is your LD retracement. So sometimes the price could just pull beyond the golden zone. You know, it's supposed to pull to start reversing from the golden zone like this for the uptrend to continue. But sometimes the price just overshoots the golden zone and it finds a support over here at the LD zone. That is the green zone, is the LD zone. So once that happens, you can say that it is an LD retracement. So if it comes to this level and the trend continues like this, you can say okay, this is an LD trend. Or in rare cases, the price, when the trend is too weak, maybe the uptrend is a weak uptrend, the price could just pull back to this 0 point. That's the purple this thing. That's where you could say deep retracement. Once the price comes to this level and the trend continues, you know that trend is not a very strong trend, because the price had to pull back too much. Normally in a strong uptrend, when you know price is respecting 50 period moving average, it's usually just pull back from this golden zone, 20 period moving up average. It usually pull back from this shallow retracement or the golden ratio. So once the price shoots beyond this place, once you have a close beyond this purple line, you can say that okay, once the price shoots beyond this one, you can say that okay, the price is that's the trend is getting weaker and you should look to leave the trade already, because immediately the price closes below this 0, that's this level over here. Immediately the price closes below it, maybe you have a little pullback to this point or to here, is actually signifying to you that the trend has ended and a new trend, which is downtrend, is going to continue, or you are going to have a consolidation of price. That's ranging market. Or so that is it for the uptrend example. So let me do it for the downtrend example. Remember I said in a downtrend you have a price coming like this, down, so you have price coming down like this, then maybe it comes in contact with an area of support, then you start noticing some retracements. Like reversal candlestick patterns over at support, immediately you start noticing it, you could just pull out your Fibonacci retracement tool. Immediately you start noticing it. Okay, let's say immediately you start noticing price trying to go up after a downtrend, you can pull out your Fibonacci retracement tool. And for downtrend, you want to go from this support level, that's the swing low, to the top. You want to go from the swing low to the top. So what it basically means is that, okay, so what usually happens is that if price should retrace to this red one, you can say it's a shallow retracement. If price should retrace within this 0.5 and 0.168, you can say it has retraced from the golden zone. Let's say it went like this before coming down. You can say, okay, it is a 50% retracement, that's from the golden zone. So, but if the price should come towards this green level before the pullback starts, you can say, okay, it is an healthy retracement of downtrend. But if the price should retrace to this one, you can say it is a deep pullback, maybe in a weak trending market. But if the price should overshoot this zero, that's a 100% retracement, and the candle should close below it, you should look to get out of the market, because it's a sign that a new trend or a ranging market is going to start. So that's the concept behind the Fibonacci retracement. So now I'm going to show you the settings of my Fibonacci. So I'm going to slowly scroll up. All you just have to do is to just look at it and screenshot, maybe pause the video and copy. Use the exact same color on the same number. You can see over there is 0, and you can see it is ash. You can see the green color 0.38. Just replace the colors, just make the colors to tally with these ones. So that is it on Fibonacci. And you should make sure you remove your background color, so that your charts will look more clean. So that's it about Fibonacci retracement in downtrend and uptrend. So I said that Fibonacci helps you to identify potential areas where pullbacks or retracement could start reversing. For example, in an uptrend, you have a price going up and you have a little pullback. It helps you to identify when that pullback is going to end and the uptrend will continue. Or in a downtrend, you have a price going down and you have a little pullback. It's going to help you to identify which level the price is going to pull back, and when the retracement is going to, when the trend is going to continue. So you should also look to combine Fibonacci levels with your market structures like support, resistance, and moving average. So if the Fibonacci level and support and resistance are in the same place, if you notice that Fibonacci or level or is tallying with your support or your resistance or moving average, or maybe an important trend line, you should take that zone as the most important level of your Fibonacci and expect a price to start retracing over there. So that's it about this video.